Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today we're going to cover some of the worst stocks inside of the S&P 500, and there are 3 ways that you can analyze and use this list in your own investing philosophy. Now, I'm going to tell you this. All right, I'm going to tell you this right now. This could be painful. There should be a disclaimer on the screen. You should hide your kids while watching this video or listening to it, or put on your headphones, because it's bad. Okay, all 7 of these stocks are real bad. That's why we're going to do it, okay? Now, as we do this list, there are 3 ways that you can interpret it. As I mentioned earlier, you can consider this your sell list. So for me, if I got a stock that's on here, I'm selling it immediately. Okay, that's just me. Okay, you interpret this how you want to interpret it. For entertainment purposes, for research purposes, you do what you want, okay? But for me, if I got stock on here, I'm selling it, okay? And you're going to hear a few that I do own. You're going to hear one, at least, that I do own that I'm absolutely getting rid of. You can also use this as a way to make money on the downside, because the stocks that we're talking about have some serious negative momentum, and there are ways for you to make money when a stock falls. If you want to learn more about that, we actually covered it in our members only this week, and we're going to do probably a 2 or 3 part series on how that entire process works. If you're interested in that, and maybe this is some easy money to make because these stocks are down, I don't see them coming up no time soon. Okay, so this could be a way for you to make some money. And then the third way that you can interpret this is a time for you to buy low, sell high. This is a time to buy the dip for some of these companies. You can consider it that. I would not do that, but again, everybody's goals are different. Everybody's time frame is different, and we may all have different opinions about the future of some of these companies because all we have is past information. So interpret it how you wish, but again, it ain't gonna be fun. Okay, for some of us, it may not be fun. So I'll go through 1 through 7 and talk a little bit about why they are there. Some of these are a surprise to me, and then we'll just, kind of take it from there. Okay. All right. So the first one on here is the most popular one, and that is Meta. I don't really need to get into too much detail. You probably already memorized how bad things are. And at the time of this recording, Meta is down 50% in the last 6 months, down 70% in the last year, for many, many, many reasons that we have already discussed this week on the channel, including 11,000 person layoff, $48 billion they spent in stock buybacks, $9 billion loss in the metaverse, the lack of subscribers, or not subscribers, lack of ad revenue, the 46% drop in operating income. The list goes on. These are all things I've memorized at this point. So that's how bad it is for Meta. I do own Meta inside of my IRA. I will not be owning Meta by the end of the year. I can't take it no more. Okay. And there are just so many other stocks, even in 2022, that are doing well. Okay. Like maybe I'll switch to AutoZone. Maybe it's Junior Parts Company. Maybe it's more into T-Mobile. All of them stocks is up and Meta is not. And a 70% loss in a year, that's just not going to cut it for you, boy. I'm sorry. Okay. So look, hopefully it goes back to its winning ways like it used to 2, 3, 4, 5 years ago, but this ain't it. Okay, so for me, I'm done with it. Okay, I've made my decision in November. But that's just one of the companies on the list, and I don't want to make this an entire Meta video for the second time this week. So going on, we have Paramount, P-A-R-A. This one's down 36% in the last 6 months and down 55% in the last year. Now, I'll also say this, just for context, the entire stock market, the S&P 500 to be exact, is down 7% in the last 6 months and down 18% over the last year. Not good, but not terrible. Not bear market territory, but again, not doing all that great. So that's Paramount. Now, I'm a little surprised, shocked. Let me not use the word shocked. It's just interesting because Disney does not show up on this list. Netflix does not show up on this list. And I can't say famously because I don't think enough people have realized this, but Netflix over the last 6 months is actually up more than 50%. So Netflix is moving in the right direction. Paramount, not so much. Disney, definitely not so much. But Disney did make this list. Paramount did. So just interesting. Throw it out there, circle it, get rid of it if you choose to, but that information is yours to do what you will. Now, the next one here is perhaps the most interesting. Normally, I think if I'm restructuring a list properly, perhaps I would have left it last. But in the case, Generac Holding, that is GNRC, is a company that y'all told me to look up. Okay, y'all told me to do a breakdown. I did an entire 19-minute breakdown on the YouTube channel about this company. And if you fast forward to the 15-minute mark, which I would appreciate you to watch the entire thing, but if you want to fast forward to about the 15-minute mark, and you will hear me say, I don't know, I don't see it. And I was not all in for the stock. I even said I had to squint to see it and say that, yeah, it really makes sense. And it did not. Okay, so at the time that we recorded the video, Generac was trading around $300 a share. And analysts, not me, I didn't say this, but analysts, and I actually had a screenshot in that particular video, analysts were saying that its target price over the next year or so was $511 a share. At the time I'm doing this video, it is less than 100. In fact, it was about $96 a share. It has not gone well for Generac at all. It is down 57% in the last 6 months and down 78% in the last year. It ain't gone well for Generac at all. And honestly, I don't know why. Now, I understand that for those that don't know, they are a generator company. Basically, my power goes out, I can get a Generac generator and my power will run like normal. Great device, things sound great. I think they're one of the best companies in its class. I don't know, it's down 78% in the last year. That's all I can tell you. Now, I can tell you this: the time we did that video back in January, obviously the world was different. We weren't dealing with Russia and Ukraine. We didn't know that inflation was as high as it was. We weren't dealing with mass layoffs either. But back then, the momentum was also pretty mixed, if not negative at that point in time either. So back then I said, hey, look, not sure about it. Is a definitely heck no for me. Like all caps, no for me at this point in time. And perhaps for everything on this list, these things could change. But right now, definite no for Generac. So that was number 3 on our list. Next one here is BBWI, Bath and Body Works. Now, I always have to say that one slow, because if you watch the channel long enough, you know I get this company and another company confused very often. I just feel like it's a tongue twister. I'm not going to repeat it. Okay, so BBWI is a company, Bath and Body Works. Okay, it is down negative 36% in the last 6 months and down 55% over the last year. And it did announce earnings. If I'm not mistaken, they did announce earnings last week. I didn't really dig into it. It's not a company I follow as much. And I don't think it's one that y'all follow as much either. But if you want to learn more about it and what's going on wrong, then feel free to let me know. But things just haven't gone well for them. I wonder how the holiday season will go for them. I don't know if they've had their 6-month candle sale thing. I only know when people post about it on Facebook, and I haven't seen anything about it. So we'll see. And I could totally have that candle thing wrong, but I think that's them. I think that's the company that they do a candle sale and people love it. Y'all let me know in the comments, because clearly I don't know, and clearly I don't invest in it because it's down 36% in the last 6 months, and that's just not well. So that one is BBWI. The next one here is a little shocking. Lincoln Financial is LNC. The stock symbol is LNC. They're down 39% in the last 6 months and down 52% in the last year. The reason why this is surprising, at least to me, is because I have been the person talking a whole lot about insurance companies, including life insurance companies. And now notice, I never said Lincoln Financial. Okay, I never mentioned them at all. And now I see why. We have been talking a lot about, Travelers and Progressive, which I've talked a lot about. We talked about health insurance companies. We talked about Cigna. We talked a little bit about United Health. Tons of other insurance companies, Humana being one, is just the ones that come to mind. And Lincoln Financial is not there, which is odd. I felt they're in the exact same business. Life insurance, a little more than car insurance and health insurance. But I would assume, it's still a very, very similar business in that more people pay you than what you pay out. But for whatever reason, this one is one of the worst, down 52% in the last year. And in fact, this is, everything on this list is, at least over the last year, is down at least 40%. So I can't necessarily rank these in terms of how bad it is, but clearly it has not done well, which was just tell us something. Anytime that a particular sector does well, that doesn't mean that every single company out there does well. And we talked about this in a number of different ways. Yes, the tech sector is not doing well, but there are some exceptions. Like, again, Netflix is up 50% in the last 6 months. Would not have thought that. would not have seen that, would not have had that on my bingo card. So that is one case as to why you can take this list and say, look, this could be a buy the dip moment. Now, I would not have seen that for Netflix, but it was. At one point, Netflix was the stock that I could easily point to and say, look at this failure, right? And just point at it. We could all laugh and say drop 25% a day or whatever. Those days are gone, at least right now, right? So you never know what's going to happen in the future, but these are some of the worst right now, but again, things could definitely change. Lincoln Financial does show us that just because a sector does well doesn't mean every single company in that sector is going to do well or just poised to do it just because they are in the neighborhood of those same stocks. So to be careful there. So Lincoln Financial, LNC, not doing all that great. All right, next one here is Intel. Intel is down 36% in the last 6 months and down about 44% over the last year. It's a semiconductor which all of them haven't done well. You're going to hear about another semiconductor company here in a minute. Also, NVIDIA hadn't done well. That's all I can really say. Yes, the CHIPS bill did pass. Yes, people still buy computers. Intel has kind of struggled for a while, so they do have that. But I don't know, it's a strange scenario. Could they do well in the future? They are building a plant in Ohio. I could see it, but again, you can see, if you're watching me right now, you can see me squint. If you listen to me on podcast, you may not be able to. But in either case, I mean, I can see it. I mean, this is one I would like casually watch, but not something I would really want to put my money into. But Intel, they're near the bottom in the S&P 500. The last one here is AMD. Now, unless I missed it when I was doing my search, I would have assumed that NVIDIA would have popped up on this list as well, but AMD popped up instead. Again, perhaps I could have missed it. AMD is down 33% in the last year and down 57% over the last year. Now, just like NVIDIA, and perhaps this should belong on the list in either case, but they're in the exact same market. I understand why NVIDIA is down. NVIDIA is down because, by their own admission, yes, there still is chip shortage to a degree, but they're not selling as many personal PCs. During the time that we had covered NVIDIA a few months ago, we know that their revenue had dropped significantly by double digits, but AMD's revenue rose during that exact same time. Feel free to go back and watch that video because there was opposite correlation where NVIDIA lost money in terms of lost revenues. They weren't bringing in as much, but AMD gained. So in my estimation, I would assume NVIDIA drops, and AMD is at least normal or rises to a degree, and that has not been the case. So it just seems as if the semiconductor market right now is the one to completely avoid. Now, having said that, because I know how the world works, we are not going to a space where semiconductors won't exist. For me, I'm still holding on to NVIDIA at this point in time. Okay, at this point in time. And I can't tell you whether you should buy Intel or buy AMD. I will say, though, that those two especially, those are one I would have on a list. Okay, I may not buy it, but it's just something I would watch and see what happens. If I start to see AMD start to move in the right direction again, then I would feel more comfortable buying into it. But right now, neither one of these are companies I would be excited to buy today. Okay, so quick rundown of some of the worst stocks in the S&P 500. We've got Meta, Paramount, Generac, Bath & Body Works, Lincoln Financial, Intel, and AMD. What can we learn from these? First off, there are a lot of areas in the market that are suffering pretty badly, but also notice the mean here. So the entire S&P 500 down 7% in the last 6 months, down about 18%. And all of these here, I mean, from the last 6 months, the quote-unquote best stock here is down negative 33. Okay, so it is real bad in some of these sectors, but it also shows us there are plenty of companies that are doing better than the market too. It's just about understanding what you have in your portfolio and being able to shift in the right spots. We all know oil and gas has been great. It's been great for bad reasons, but in either case, there are some energy companies that still make sense. We've covered a lot of the other areas that have done well, will likely continue to do well. But you want to make these adjustments, especially as we approach the end of the year too, because this is one of the best times as a whole to invest in the stock market. We know whether it's midterm election years or just a general year, November through April tends to be the best time, and we'll see. Right, we'll see what happens. But this is still a great time to invest. might not be the best time, or might not be the best time to invest in these particular names at this point in time. All right, let me know what you think in the comments below. Obviously, does not include crypto at all, because it's a whole bunch of bad spots there that would definitely absorb this entire list. But let me know, do you own any of these companies on this list? How do you feel about some of these that you may or may not own? And we'll take the conversation from there. And as always, make sure that you check out the members only. I show you a technique that you can use to profit when a stock drops as well. And you know, it's always good to be able to make money whether the market is up or down. So make sure you check out that video. We're going to do a series over the next few weeks. All right, that's it for me. I'll talk to you later. Bye.